podcast with our host, Ed Lyon. Ed, here we go. We were talking in the green room. We decided let's do a podcast. I'm teaching you to be impromptu. No script needed. All right, so let's
script needed. Let's hope we stay on the rails.
No, so what I would say is, what is your secret sauce? Makes you different and makes you one of the, I guess, best tax strategists out there in the industry. So
I'll take that. So the secret sauce is a comprehensive look at every aspect of a client's finances. There's an intersection, the Venn diagram between financial planning and taxes, and I live in that intersection. So I'm not just about lowering taxes, it's about helping people accomplish their financial goals with a minimum of interference from tax. So it's not just I've got 3 or 4 tricks, I've got 3 or 4 products or strategies. What I do is holistic planning. I look at a client's business entities and structures. I look at their executive compensation. I look at qualified and unqualified retirement planning. Even if you don't own a business, I'm looking at real estate investments, portfolio management, charitable giving, exit strategies, and making sure that the income tax strategies play well with the estate tax strategies. So I would say the secret sauce is, at that level, is comprehensive planning. The other secret sauce is storytelling, being able to take complicated tax planning concepts and reduce them to plain English. I think it was Warren Buffett who said, if you can't explain your business to a 5-year-old, you don't have an effective business. So one of my projects is working with AI and coming up with suitable for a 5-year-old explanations of different tax planning strategies.
I think that's huge. And this is what I do when I'm looking at pitching my team now, as I've built a team. Whatever I'm trying to pitch somebody, I'm able to sell it very quickly. And it's once you find that connect the dots, you know exactly what you want to do. And I get it. But the holistic side is the important thing. You don't just have one tax strategy. You have multiple tax strategies, but you also are looking at the long-term understanding because you understand both the accounting side, you understand 3 sides. You understand the law when it comes to accounting, and then you also know the financial planning side of things. And that's the difference when you're looking at specifically working with someone like you. You're not just looking at just an accountant's eyes, you're looking at it as a financial planner's eyes. And adding that attorney phase makes you a triple threat.
Yeah, I'm downstream from financial planning. You make the decision what you want to be when you grow up and what you want to do with your finances. Then I'll come in and I will tell you how to accomplish those goals with as much tax efficiency as possible. There are a lot of strategies that involve locking money up, or you walk away with nothing. So let me walk you through this concept, and it's the approach that I take with clients. Let's say you've got $100,000 in income, and you're in the 37% tax bracket. Absent any planning, you're going to pay $37,000 in tax, and you're going to walk away with $63,000. Now, there are a lot of tax planning strategies that will eliminate the tax, but what do they do to the walkaway number? So if you don't want to pay tax on that $100,000, you could give the $100,000 to charity. That will eliminate the 37% tax bill. But how much are you walking away? 0, because the charity has the money, you don't. So you've avoided a $37,000 tax bill by giving away your $63,000 walk away. Or let's say you can put $100,000 in a qualified retirement plan. Again, you avoid the $37,000 tax, but your walkaway number is 0. Now, the money's working for you in a qualified plan, but if you're looking to build a house for your family or buy rental property or expand your business, you can't do it. You can't do it with that money. You've locked it up. So I look for strategies like a leveraged equipment leasing program where you put $10,000 down on equipment that costs $100,000. You then borrow the remaining $80,000 to buy the equipment, and the lease payments will cover your payments on the note, but you'll be able to depreciate that whole $100,000 in the first year. So now let's look at the walkaway number. You've eliminated tax on the $100,000. Instead of paying a $37,000 tax, you make a $10,000 down payment on the equipment. Your walkaway number goes from $63,000 all the way up to $90,000. So you've eliminated some tax, but you've put those savings in your own pocket. That's where things get really attractive. You don't have to give the money away or lock it up in a retirement plan. So being able to explain in concepts like walkaway number and how a program works, that's really more important than the knowledge. I tell the accountants that I train, you can know everything about taxes, but if you don't have any clients to use that knowledge with, go to work selling insurance or work in a bank or something. Your tax knowledge isn't going to be valuable.
You talk about the workshop last week on the podcast and how these guys were just blown away by the strategies you went over. How many different strategies did you go over in that workshop?
So the workshop you're talking about, it's the Certified Tax and Business Advisor program that I offer through Excel Empire. And it's a $5,000 program. It's 3 days learning how to be a tax planner, learning how to think like a tax planner. And I probably went through 30 different specific tax planning strategies. There's no one client who's going to use all of them. And I didn't make the people in the workshop experts in all of those strategies, but I gave them enough information that they can bring clients in the door and they can think like a tax planner on what's going to be important for them. I had a meeting yesterday afternoon at 5 o'clock with a client who runs a business here in my hometown of Cincinnati. I delivered a written report that had, I think, 14 different strategies, 1 page in the report for each strategy. So we started with the one that saves him the most money. He's going to be able to convert $1.9 million of 401k money into a Roth 401k at zero tax cost. That's going to wipe out the tax on that 1.9 million plus all the future growth on that 1.9 million. It's probably going to end up saving his family $3 or $4 million in tax over the lifetime of the account. So we started with a big one and we worked our way down to the smaller ones and we came up with a plan of action. What are we going to do first? What are we going to do second? What are we going to do third?
Wow. And it just continues.
It continues, yeah. And the great thing is Congress is going to change the rules. At some point, there's going to be a Democrat in the White House. Congress is going to change the rules. And I should not say this on a recorded line on a podcast, but I'm going to get paid to do the planning all over again when the rules change.
Yeah, that means that constantly you'll either go from one direction to another, and there'll be new plans and new opportunities.
There will be new plans. There will be new opportunities. In 2017, with the Tax Cuts and Jobs Act, that created qualified business income. It created qualified opportunity zones, lowered the tax rate. So these things are happening all the time. Congress talks a lot about tax simplification, but look at what they do, not what they say. They don't make taxes less complicated. They have not done that since I was working for Representative Jack Kemp back in 1986 with the Tax Reform Act. Things just get more and more complicated. And at this point with my clients, I say, now you know why tax lawyers drive Jaguars.
Exactly, because they're able to figure things out for that client.
We're figuring things out. And for clients who are in pain over their taxes, I don't know if you're familiar with the humorist Fran Lebowitz in New York, but she said, a dog who thinks he is man's best friend is a dog who's obviously never met a tax lawyer.
So let's talk about once you're at this certain tax rate and you're used to paying taxes every year, how do you work with you and figure all that out? Yeah.
So there are 2 main lines of defense against taxes. For business owners, most of operate their business as a pass-through entity. It's a proprietorship or a partnership or an S corporation where the money doesn't get taxed at the entity level. It just gets passed through to the owner's 1040. So what we're doing at the first line of defense is we're looking for strategies to keep income from hitting the 1040. And that might mean putting some money in qualified plans. It might mean a strategy like a business entity reorganization with a C corporation. We might be looking at special purpose vehicles like an IC disc, an interest charge domestic international sales. The idea is keep the income off the 1040. Then once it hits the 1040, whether you're a business owner or a high income W-2 earner, then we look for strategies to offset the income that's hit your 1040, like the leveraged equipment leasing play that I just talked about is a way to offset income. You can do that as a business owner, or if you're an $800,000 a year doctor or lawyer, you can do it that way. So lots of different strategies. And then at each level, I'm going to ladder the strategies. So we're going to look at the one that gives you the most bang for your buck first. Is it a good fit? Maybe it's not a good fit. If it is a good fit, we're going to X it out. If it's not a good fit, we're going to move the next step up the ladder. So if I've got 3 strategies and one is an effective 0% tax rate, one is an effective 10% tax rate, and one is an effective 21% tax rate, I'll look at the 0% first. Is this a good fit? If so, great, we'll back up the truck. Then when we're done with that, we'll look at the 10% strategy. We'll look at the 21% strategy. Now, how much is left flowing through to your 1040? How much more can we do with a different set of strategies? And that way it's flexible for everyone. A business owner might come to me and say, I'm borrowing $1 million from a bank next year to expand my business or to buy a building. So I don't want a strategy that's going to lower my adjusted gross income. I'm reporting to the bank. Great. Then we will look at those business level strategies. We'll look at the individual level strategies that get deducted on Schedule A or get deducted on Schedule C, but you'll still be able to go to the bank and show that your S Corp makes $1 million a year. There's no one size fits all. So I got this bookshelf behind me. There is no off-the-shelf book that I can just take that is tax plan. The value is not just knowing the strategies, it's knowing how to mix and match them and play tax Tetris so that we get the best combination of strategies for the client. Your strategies for your business would be different from, for example, a client who is a co-host with you on their own podcast.
Right. And you're looking at what fits and what works and why it works. And sometimes you might see month one, I'm going to re-strategize in month 3 of working together because things could change in the business. Some other opportunity came, more revenue than it was expected. Okay, we got to peel the layer back and change some things up.
Or the law may change and that may affect previous tax returns. So I have a client whose accountant didn't know that they qualified for research and development credits. So what we're doing is we are moving some of the expenses they paid in 2022, 23, and 24 into 2025. We're going to have to file amended returns for the first 3 years and pay a higher tax rate, but we will, or pay a higher tax amount, but we will more than offset that. And we're going to create over $11 million in new deductions in 2025 because we're bunching all of those years. And why are we able to do that? Because of the Big Beautiful Bill. Or as the Big Beautiful Bill does not poll well. The Democrats did a good job of attacking it and publicizing the fact that there are Medicaid cuts. So now it doesn't poll well. So the Republicans are calling it the working families tax cut. And in fact, the bill did cut taxes for working families. If they hadn't passed some version of the Big Beautiful Bill, 80% of Americans would be paying higher taxes next year. That's beyond politics. There's no politician in America who wants 80% of Americans to pay higher tax rates.
So one of your strategies for the R&D is figuring out what could be research and development.
What qualifies as research and development? The CPA who was preparing the returns for this business simply didn't understand how much of the work this company was doing qualified as R&D. It doesn't have to be scientists wearing white coats in a lab. It can be improving processes and procedures, creating intellectual property. Anytime you customize a software for your own business, that's research and development. So the cost of hiring somebody to do that qualifies for this. You've just got to know what's out there and where to look. And so the training that I did last week, and when I brought 3 of the guys from the training onto the podcast last week, that was, here are the things you need to know about, the things that you need to look for. You don't need to be an expert in how to implement them. Just look for them. And when you find them, that's where your opportunity is.
So for research and development, if I created my own app, that could be a potential research and development.
Absolutely. The cost of creating an app is going to qualify for the R&D credit. So the domestic employee, the people on your team, you mentioned you have a team.
Yeah.
If people on your team are creating an app, then that's going to qualify for the R&D credit.
How would that, so that would be not just the cost of paying that person to do it, but also it'd end up being a tax write-off as well in the process? Because remember, your team will be a certain write-off or be a different type of a write-off.
It'll be a more valuable write-off. It's a more valuable write-off if you can do through the R&D credit. And again, you need to be talking to an expert in that area. But part of my team is a group that does nothing but R&D credits. They're genius nerds. And I'm going to make sure they listen to this podcast so that they can hear me calling them genius nerds. But that's what they are.
With the whole all AI out there, this is a perfect time for a company that's looking at, I work in the tax strategy process, looking at the end of 2025 and saying, maybe I can do some R&D ideas, especially with AI development at the end.
AI is going to give rise to a whole lot of R&D credits.
Which, again, you might implement them now and they might not really work for a while, so you might as well do it.
They might not pay off, but here's the other thing. So the R&D credit is primarily for the wages that you pay the employees who do the work. AI can do a lot of creation. AI is a great productivity tool, but you can't just tell AI to do something and put the AI to work. 80% of the work with AI is after the AI generates, and you're looking at the output. I do this when I create content with AI. I would use AI in a lot of cases to create a first draft, but then I've got to go through and make sure that the first draft is correct. I used AI to create some content on the big, beautiful bill. ChatGPT told me that Mitch McConnell was the Senate Majority Leader for the big, beautiful bill. He wasn't.
No, and we talked about the dangerousness, and we'll never bring out I'd rather just call it AI now, because I'm telling you, if I would bring out another one, which I'm never going to bring out that one company I said, I already edited that out. So on the podcast released this week. But if we're looking at, is ChatGPT going to win the AI war? I'm going to put this out there right now for you guys. It won't. ChatGPT will not win. It reminds me of Clubhouse and social audio. I've said this 3 or 4 times because Clubhouse was the biggest social audio app, first ever to start social audio during COVID. One created it that had all the money, and guess what? They lost. They were valued at $1 billion. LinkedIn wanted to buy them. They're worthless now. So that
I recognize the name.
Yeah, but that's where I see things. So
is ChatGPT eventually going to become the MySpace of AI?
That's my prediction.
Okay. Yeah, I mean,
unless they decide to have LinkedIn buy them. And they're Microsoft. I think LinkedIn's owned by Microsoft. Somebody, they got to go and just say, here's the technology, we're out. Because you're not going to compete with the big companies.
But at some point, we need to do a podcast episode on AI in the tax industry.
I'm telling you, I will prompt it and we'll see if I can think like an accountant.
I wrote a column for my LinkedIn column about 3 or 4 weeks ago. Some AI geniuses gave a prompt to AI and asked AI to invent a tax shelter. And it did. AI invented a tax shelter. Now, everybody I know who's on the cutting edge, really who's technologically up to date, AI is not cutting edge anymore. If you're not using AI, you're going to fall behind your peers. So people I know in the tax field are using AI. They are using it as a productivity tool more than more than they're using it as a research tool. They're using it to create processes and workflows and things like that. But nobody who has the word CPA or JD behind their name, the initials CPA or JD behind their name, should be asking ChatGPT flat out tax questions and relying on AI's answers without doing some checking, without doing some due diligence.
You're going to check, but it's going to help you faster. It's going to make your grade and stuff. Yeah. And that's going to be where you're going to have to change your fees to a performance structure versus something else, or lower your fees and then get extra on the back end. That's marketers need to do that, because at the end of the day, everyone's going to start doing DIY. These are great conversations, Ed. This is the first one we really let me loose. And
I'm enjoying it. You're right, though, because first of all, we live in a DIY culture. 20 years ago, people went to experts. Now they do their own research. They go to Google or Perplexity or whatever they're using. I don't use Google search anymore.
Interesting. Google is rocking it, but then
but what they're rocking at is the AI, is giving the AI results rather than the links. The old Google links, I don't use anymore. So I use AI as my primary search.
You're using Google then? Or you're using a different...
I'm using Perplexity. So Google fell behind and they've caught up with their...
They've caught up to the point they're beating ChatGPT, in my opinion. But we'll have to look at that.
This is a conversation.
Yeah, because I don't have Perplexity, but I use multiple different large language models. And the reason is I'm not using Perplexity is I don't know why. Because it's never I'm a big fan of Claude. So you look at all the different ones. But what I'm saying is this would be a great podcast. Let's see if, and I did this with an oral maxillofacial surgeon, one of the best gurus, if I can answer the question the same as you. Let's not go there. Let's go with somebody else, a regular accountant versus something else, and see what I could come up with a use case and see what the answer is. Because that's where I see myself as powerful as 60% of marketers of industries I wasn't doing now, but I am now doing because of AI, because I feel I'm competent to do it. Because most marketers are not competent at all, and they just had a little bit of an expertise. Now I can add that expertise and my strategy to make it 1,000 times better and be a lot more cost effective for my client.
Sure. With the marketers, what is it they say about advertising? Half of all advertising dollars are wasted. We just don't know which half.
And they got to look at right now, and the only way they would be able to do it is using AI. because AI would be able to do that. I guess that's why Elon and things was able, but go figure. All right. So
it's a big part of the tax industry, and fee structures are going to have to change. As we were saying 20 years ago, people went to experts. Now they can DIY things. They could Google things. They can ask ChatGPT or Claude or whatever large language model they want. So people feel empowered to do stuff themselves. Now, sometimes that works. Sometimes they don't do a careful enough job checking and they create trouble for themselves. There's an old marketing story about two barbers in a town, and one barber put out a sign saying $8 haircuts. And the other barber put out a sign. They didn't lower their price. They put out a sign saying, we fix $8 haircuts. So there will be business to fix problems for DIYers who think that AI lets them do something that it doesn't. When I was doing tax returns, I always loved sitting down with someone who said, I do my own taxes on TurboTax, because I knew I was going to find mistake after mistake. And TurboTax doesn't hire your children so that you can write off the cost of their summer camp. It doesn't say hire your spouse, set up a medical expense reimbursement plan, and you can write off your family's prescription drugs.
Everyone's so they want to see.
It doesn't do any of that stuff. It's a tool, and like any tool, it's only as good as the person who's using the tool. The example I use with my accountants is, and they love this, yeah, you can prepare your own taxes using TurboTax. Also, if your kid breaks his arm, you can go to Amazon and you can put orthopedic bone saw in the search term, and you can buy an orthopedic bone saw for $25. But that doesn't mean you're qualified to fix your kid's green splint fracture.
So that's where niche versus not niche, all those different things are going to come. But if you are an expert that's getting paid for your expertise, if you used AI, you'd be 100 times more productive and be able to bill more and see more people and also become better.
Yeah.
Because if you don't constantly study, it's a place to study. But that's an interesting thing that we need to dive deeper into. Episode on tax questions using AI and see the answers.
See how enthusiastic you are about this topic.
I can destroy the medical field, but I don't know about the tax field. We'll see.
Okay.
Yeah, because it's an interesting thing, because that's the thing. I used AI to help me through some court struggles. I'm not saying now were they best? No, but were they better than most people? Absolutely. And did it give me a lot of knowledge that I didn't know before? Absolutely. Now, if I had I knew the system and how it was working, I'm like, no, thank you. I would go with an attorney next. But would I use that? Would I use the attorneys that I had before? Absolutely not. So this is the lesson learned. You go DIY, you get what you get. But can you get better? It's all about the Benjamins at the end of the day.
It is. An AI can save you some Benjamins on the front end. And if you do it right, it won't cost you Benjamins on the back end. But if you do it wrong, the back end Benjamins are always more expensive than the front end Benjamins.
No, when you can work with Mr. Lyon, guess what? You're doing well for yourself. That's the thing. Pat yourself on the back when you can work with someone like Ed Lyon, because you've accomplished something. That's the thing. And because there's not many people that can go to make a certain amount of money. And it's a lot of hard work and effort and strategy to get to that point. And then you need to bring someone in like you.
People spend their entire lives focusing on financial offense, which is making more money. And I'm a big fan of financial offense. I'm not a big fan of frugality, the Dave Ramseys of the world. Anyone in financial planning who tells you the key to financial success is not having a Starbucks is someone you can safely ignore, because it's a lot easier to earn more money than it is to spend less money. But when people get to a certain level of success, taxes are their single biggest expense. I have clients who will spend more on taxes in their life than they will on any other single expense. And so when you get to that point, bring in a financial defensive coordinator, bring in a financial defensive coach who can help you save.
Now, I don't know. I'm a big fan of the law of attraction. I literally look at money when I spend it because it comes right back to me. And that's how I look at things, but I'd rather spend that money on things that I can enjoy than spend it on taxes.
Sure. On taxes or any unnecessary expenses. Yeah, you can save 15% or more on car insurance by switching to Geico. But what's that really going to do for you in the long run? You don't spend that much on car insurance in the first place.
You have the mindset. And that big thing too, Ed, right? When you say your success?
Yeah, it's the most important thing. So there are some people who have an abundance mindset. There's some people who have a scarcity mindset. Dave Ramsey has a scarcity mindset. Successful entrepreneurs have an abundance mindset. Warren Buffett has an abundance mindset. Look, money is an ocean. There's an ocean of money in this world, and you make the decision. Are you going to go there with a spoon, or are you going to go there with a bucket? And if you have a scarcity mindset, you can save some money by not buying coffee. But if you make $100,000 a year, you can't save $100,000. There's only so much you can save before you're living on the streets and eating beans out of a can. What really is going to make a difference is not taking your spending from $80,000 to $70,000. What's really going to make a difference is taking your income from $100,000 to $150,000. When you do that, taxes become a bigger threat. Taxes go up as your income goes up. If you double your income, in most cases, your tax bill will more than double. So as you're moving up that ladder of financial success, tax planning becomes more and more important as you go higher. But I have clients who are making $1 million a year, taking home $600,000 before I meet them, and we can cut their tax bills in half in a lot of cases. I have clients who are paying $1 million in taxes, and in some cases we can cut that in half or even more. Again, is the strategy the right fit? Some people aren't in pain over their taxes. If you're not in pain over your taxes, you're not going to be a good client for me. But if you are, there are a lot of great strategies out there. And you just got to ask yourself, when was the last time your CPA came to you with an idea to save money? For most people, the answer is never. Most people's CPAs do a really good job telling them how much they owe. And that's important. But I'm in the how to pay less business. And people would much rather pay me to tell them how to pay less than pay the accountant to tell them how much they owe.
Be interesting, bring CPAs on that have their own firm and yet they don't talk about these things, and then see what kind of conversation would be for a podcast.
Yeah, they're not my contacts. The CPAs that I have brought onto this podcast are planners. And they understand the value of planning. They understand from a marketing standpoint, they got to stand out.
But I never thought they were out there.
Yeah, there aren't many out there. They're starting to do a better job of standing up and raising their hands. So you're a marketer, Neil. Here's my favorite marketing quote. And you're not going to like this, but it's from Tennessee Williams, the playwright, Streetcar Named Desire. He said, there are only 3 cities in America: New York, San Francisco, and New Orleans. Every place else is just Cleveland. Now, I know that you live outside Cleveland.
Yeah, but see, I'm a Pittsburgher. They might not like that joke.
Well, he could just as easily have said every place else is Pittsburgh or Cincinnati, where I live, or Indianapolis or St. Louis or whatever. But what he was saying was every place else is the same. Every place else is not special. So my question for anybody who's marketing a business, whether it's a tax business, a financial service business, or anything else, is how are you not Cleveland? What are you doing to be not Cleveland? Because people think taxes are taxes are taxes. If I've got a good CPA, one CPA is as good as another. One EA is as good as another. And that's simply not true. So with tax planning, what I'm teaching people, what I taught last week, was teaching financial advisors how to be not Cleveland by leading with tax planning. Because nobody wants to talk about life insurance. Nobody wants to talk about mutual funds. Nobody wants to hear about your separate managed account or your semi-proprietary trading strategy. It goes right over their heads. But when you start talking about tax savings, it's like the old E.F. Hutton commercials. Everybody listens because everybody wants to pay less.
And that's the key component. And that's where people listen and be able to give that advice. All right, best place is go to your website, contact me, the media giant, or go ahead and just drop us a note about the podcast. Really enjoyed this conversation. It was fun to get to know each other further than just interviewing somebody. And we have to do those impromptus. I just say, let it record. Like I was working with a client today who she's an ATF. She's writing a book that was undercover ATF. And I was just fascinated. So I've had 2 unbelievable conversations. I get paid for this. Right. And I did it the right way, independently. I don't have to say, someone else pay me a check. I just start my show and go. That's it.
It's got to be a dream job. The fascinating people that you talk to.
Oh my gosh, but it gives me so much knowledge to keep going and have another conversation. I just can't wait to have everyone together in the same room together. That's a goal of mine.
When you have a conference for the media giant community, that's going to be the best cocktail party in town.
Oh yeah, because you never know who's going to be there.
Yeah.
And they're going to all have different stories to say.
Yep.
All right. That was the special simulcast to let you know of the LyonShare and the Neil Haley Show, guys. Take care.